Good morning, everyone, and welcome to the European crossover webinar. And we've seen the cable continue to stay a little bit weak after this that vote. We saw the herky-jerky price movement. We have seen the dollar come off of those lows. Now, we have run into some resistance right there at that pink line. Although we had our resistance a little bit higher, I think we still haven't retained it around 65. The peso's finally got up here to 16, but we still haven't closed above it, but we've come up here to challenge. And that's really not till after we've come all the way to 1908. So curious what people see the bullishness in this or have. I mean, it has just stayed bearish the entire time and still hasn't even been able to close above 1916, although they're coming off of what has been our support, which is 1908. So it's not like as if the market decided to, move from, let's say, 1911 or something like that. We actually had to come all the way down to 1908, and now we're starting to see a little bit of a short covering coming here, but that's just value covering. Dollar yen has finally started to weaken just a bit. S&Ps slid under 3,000. And that's allowed this dollar yen to go on and pair back. So we've actually been as low as what, 824? We're at 839 right now. Aussie dollar also has evened back a bit. We'll go and take a look at the cross rates. Euro Kiwi has kind of, after 4 successive falling days, we're kind of just sitting here in that same area, but below the apex level. So I'm sure we've knocked off a lot of these new fresh bulls. Guppy has paired back just a bit, as has Sterling Odd. Looking here with the Euro Odd, just a little bit of strength here, but that's really more attributed to the weakness we've seen in the Aussie. And we've seen Euro Yen also fade back a bit. The Bund has just eased back a bit after a nice rally up here off of these lows from that value area, which is actually, we had warned about that since Monday, has allowed the euro to go and come off of those highs. So that was one of the main drivers, and or actually the key driver. And so we're seeing the euro come off. The same reason why we thought the euro would strengthen as the bunds moved down. Thought the idea was that we would see the euro weaken a bit off of the same area as we start to come off the lows from here into this value zone. We've referenced it quite a bit. You can see that here. Obviously, this is because we found this value zone. This is coincided with the euro sliding back. And gold actually moving a little bit higher. Just when it looked like it was going to break past this trendline support. You can see here, we actually started to continue to make a pushback up here towards this 1495. I myself wouldn't be interested here because I don't like coming back, and this would be a third challenge here. So here's the first one. That was a beautiful sell-off. One more again, and then now what? It's like, it reminds me, this is just like, I'm not saying the same thing is going to happen, but this is just like the dollar CAD. Remember, I remember when I was trying to buy it at, was it 3107 on that dip down, and the market got as low as what, 3111 or 3112, and then this is all intraday, and then it came down to 3107, and that's where I had it. and it still didn't fill me because it came right at that level. Then it came a third time. Well, sure as heck didn't want it a third time. And then, of course, as you know, the rest is history because then we finally broke below 131. So it's the same thing. Look, here's the run up here, and I didn't even see that when that happened. It's a beautiful one here. And actually, the second one here is a one that, wow, I didn't even see that one. We fell back again, and now a third time what? They were like, okay, now I'm ready to sell it. No way. They're probably going to go and take you out. I mean, like I said, we could stall a little bit, but no, I wouldn't be interested in any way whatsoever then. And plus, we would have fallen here to new lows. Look at that. Here, a challenge. And now we hold it. So pretty good chance that we might even go above it. So I definitely would be interested on this move up to 1495. That being on the spot gold, XAU. You can see, as I said, the S&Ps came back sub 3,000. That allowed the dollar yen to go in and come off. Let's go and move back into the main screen, and we'll cover the news. And let's take a look at what we got here. We do have today Canadian wholesale trade at 8:30 Eastern. And that's going to be it from what I see here. Monthly home prices at 9 a.m. Eastern. So we'll take a look at the morning bid. With the delay, election and eventual deal now considered the most likely Brexit outcomes, and not necessarily in that order. The past 24 hours delivered all three in one way or another. On Tuesday evening, the Parliament voted for UK Boris Johnson's negotiated Brexit withdrawal deal in principle, but then voted down his attempt to rush the legislation through this week, reserving the right to examine, possibly amend swaths of the deal in a way that would make it virtually impossible for Johnson to keep his promise to take the UK out of the European Union by next Thursday. The EU side is now considering the request extended. Johnson also swore he would never seek. Is widely expected to agree without a formal summit. The extension is likely to be to January at least, with reports of causes for an earlier break if the deal can be ratified before then. But with no majority in Parliament to work through further votes on amending parts of the standing agreement, Johnson's advisors say the only option is to call a snap election in the event of a substantial delay being granted. Opposition parties are likely to agree that now, in that they appear to have ensured a no-deal Brexit is off the agenda. The upshot for sterling was to knock back some of the recent strength, with the pound losing just over a cent from the 5-month highs, just above 130, and settling about 28.70 first thing. The prospect of an election added some uncertainty that's cooled the pound, but it retained most of the recent move higher as the prospect of a Halloween Brexit crash without a deal has been all but removed. Much like the pound's ebb, risk markets around the world have traded off Brexit also pulled back. And the more cautious move this morning was a drop by shares of U.S. chipmaker Texas Instruments of almost 10% after the bell, and said it expected 10 to 17% drop in revenue. The current quarter was worse than expected. The ripple through the chip and tech stocks, with Asia's main markets all lower. Shanghai, Hong Kong, and Seoul indices fell 0.4 to 1%. So that's really what triggered the sell-off that we saw after hours, which was Texas Instruments off almost 10% after the bell. Say it expected a 10 to 17% drop in revenue. And the Brexit weighs on the pound and dense risk appetite. The pound edged lower on Wednesday after an overnight fall as Brexit hung in the balance, with the British Parliament still divided on how, when, or how even to engineer Britain's departure from the European Union. The yen rose against the dollar, and the Aussie dollar, as some investors sought a safe haven, and doubts among Brexit and efforts to de-escalate a bruising trade war. You know, yesterday they said everything looked good. Now it's like the concerns are, oh, but now they've got to de-escalate it. That's the saying is sometimes this stuff is just a lot of malarkey. But like I said, we just touch on the news just to get what the tone is. Now we do see that with the result of that, the reason we saw that working lower because you know that we saw the S&Ps come off, the dollar yen come off, is because the Texas system is warning that they're looking at for a fall of in revenue of 10 to 17%. With no major economic data scheduled in Asia on Wednesday, traders will be left to ponder whether the Britain will hold a general election to break the impasse. Investors also are closely watching for signs of a thaw in the U.S.-China trade war, which has cast a shadow over financial markets and global economic growth. The pound will adjust in a narrow range for the time being, said Junichi Ishikawa, and that's about it. Dollar index stood at 97.45. Nothing else. Bear with me. Okay, and let's go on and move into, I guess you get into the analysis. Hang on. And someone's asking about the webinar. Okay, so here we are. We're covering the euro, and let's go and just make a good reference to notes. So from the Asian update, it said the euro paired back on Tuesday, eventually sliding down to 11.18. If you remember, yesterday we had 11.21 as our bias chart support, and I think the low at the time was 23. But then, as the market rolled back after Brexit, we actually took out the 21 and got as low as I said, 18. So it says the euro paired back on Tuesday, eventually sliding back to 11.18 on the back of. I even said Takis was asking about that on the back of the Bund rates declining. Support for Wednesday is 11.90 with a resistance at 11.60, followed by 11.92. So let's just go on and we'll take a look at the Bunds. But before we get there, our initial, this still remains the same, but for now, consider where we're at. Short-term resistance is going to be 11.60. And doggone it, I don't know why I put 11.90. I meant to put, here's 10.90 on this dip back. So on this pullback, that's what I'm looking for support to go in and come in here is at 10.90. And you can see that coming in right there on a slide back right there, 10.90. I don't think we're going to pull off a whole lot lower, but and then the immediate resistance is going to be here at 11.60. Immediate resistance. Now, getting back to the Bunds, and we referenced that earlier, and Takis was asking about that. See, here's the bones, and we had mentioned this over 2 weeks ago, and we were looking for potentially a fall in the euro. Bear with me, not a fall in the euro, but a fall in bund rates, because obviously the bunds have an inverse relationship. So lower prices mean higher rates. So at the time, this is exactly where we were. We were right here, and we're looking. If we pull this further back, we can see, wow, what a move! That's from May. Let's look at it back from January. Look at that. It's like, wow, what an epic move. So at the time, we talked about, hey, look, this market really looks like it's breaking. We were right here at the time. And I remember having this pink line. I said, hey, if we get past this pink line, they could be careful because we can see the euro really move. Now, at the time, the euro was trading at 980 at the time. And so we were looking for a continued move. Now, like I said, this is about the move I was looking here, right there. I didn't realize we'd move all the way down to here. Now, when you look at here, look at this area here. The market, I thought we'd probably find some support, like I said, right around here. We actually extended the move all the way down here, but this is a pretty good value zone here. You see all the touches here, and I had it in green. So one of the things that we warned about on Monday was that, hey, be careful with the euro, because one of the things that also happened on Monday was, look, if you look here, we actually made new lows, okay, but the euro didn't move with any significance as far as being higher, okay? So I said, hey, look, we might make a little bit lower move, but be careful, because I was thinking any extra move that we get on the upside for the euro, if I was long, would be happy to go in and get out. I mean, if we made it up to, like, let's say 1180, 1190. Now that did not take place, okay? But in the meantime, you can see we made newer lows in boom prices, okay, meaning higher yields, and we've turned around and come back. Now, have we come back a ton? No, but we have gone and come off of this here, and subsequently, we'll go back. We've seen the euro here stall. But like I said, when we made those new lows in the bunds, actually, you know, when we made those new lows, you can see the euro uptick just a little bit. Okay, so here's Wednesday, Tuesday, Monday. Okay, so Monday we made you know, slightly higher rates, yields in bunds, but that was only good enough for the euro to maybe move up 10 pips. And that was it. You see what I'm saying? I would have thought maybe with that extra move, we might have kicked it up closer to 12. And I thought, oh, that would have been a pretty good area. But since then, you've seen the euro slide back. And even yesterday, we had 1121 at the time. The low was 23. And then I put in the chat room that a scalp resistance was going to be 1151. Well, they kind of ran out of gas at 1143, but they came back and they made it up to, I think it was 1155. And then we slid back, and the rest is, you know, I don't say the history, but you can see where we are right now. Now, today's support is going to be 1090. Resistance will be, short-term resistance is going to be 1160, although the overall resistance still remains 1190. But once again, you have to, you know, this whole, we were here when you see me talking about the boons, and I was saying, hey, we were there. This is exactly right where we were at. We were at 980, and I was saying, hey, be careful. We could see a rally in the euro, because I think these boons are ready to fall apart. And they did fall apart further than I expected. But this is all precipitated on the move in boon yields. And don't think it wasn't. I mean, obviously technicals have helped, but this whole move on the downside was the move. It was basically, you can basically mirror it from day to day. The move lower in boons, as far as boon yields, was this move in the euro was led by that. So of course the move back, as the yields you know, slide back, has actually dragged the euro up here. But we did run out of gas, and so there's still a potential that we can still slide back. We'll see what happens. The boons have made a little bit of rally. They can dip back. If we get a dip back, I'd probably use that opportunity, especially if we got above these highs, to take a pause. But we shall see. But that's enough time on the euro. We're going to move on to the cable. Following the vote, cable jostled back and forth, challenging 130, but eventually closing sub 129. We've talked about the importance of this pivot. You can see that back here. They were doing the vote, and I mentioned that right there, and you can see how much trouble the pair had with the 2980. I mean, they got above it, but they could not. They started to eventually roll lower. Resistance now is going to be 2950 with support at 2840, followed by 2737. So bear with me. Let's go and move into the Aussie then. Okay, it says the Aussie stalled at the bias chart resistance of 68.81. You can see that pink line right there. Support comes in at 68.09. So it's going to stay the same, 68.81. And then this is that breakout area that was resistance before is now support. So 68.81, 68.09, no changes there. We'll move into the Kiwi. Okay, Kiwi took a pause at resistance of 64.36. You can see that hit it right to the pip at 64.36 level. So Kiwi took a pause at 64.36 after a 4-day run. The bias is now bullish and support is 63.26. So just like the Aussie, that resistance is going to stay there. So you can see that it hit it right to the pip, kind of paired back a bit, and it's going to be right here. Support now is 63.26. So we'll give it a little bit of room. That's quite a ways down, and we mentioned, I don't want it to be that far. That is a little bit overdone. We'll go right there with, if we were to slide back, 63.42. 63.42. We had 63.56. We'll just give it a little bit of room if it does pair back. So hang on. We do have a little mini gravestone doji. But I think that on the way back, you can see where your risk is. In 42, that'd be just below this 50. So still a ways back. It'd be a decent little pullback. But if we saw the market pair back, that'd be a good area for bulls to go and defend. With that, let's go and move into the dollar CAD. The dollar CAD saw a brief rally after the move sub 31 even. The high for the day fell short of the bias chart resistance, which is 31.36. Resistance remains the same with a possibility for a rally to 31.66. The downside support on a further pullback is 30.43. So here's the deal. I mean, when we saw this big old break, we kept saying the market has a date with 131. And we had support at 30.90. I thought we'd get a bounce off of that 30.90 as we went sub 131 at confluence with the trend line. We went a little bit lower. I think we got as low as, 30.70 or something like that, 30.72. I thought we'd see a rally at least to come up to 31.36 and potentially to 31.66. Well, this rally really fell pretty short. I mean, not super short, but it only made it to 31.24. I would have thought we would have seen even better than that. So for the meantime, and you can see we're still sub 131, there's still the potential if they don't, let's say they try and come down here and they can't find a real follow through, that we could make a move back up. So for the meantime, 31.36 is going to remain the resistance, and support, you can see that here, 30.43. Now, I still think there's a possibility if we don't find that, that we could, if we don't find any more additional selling here, we could see a rally that could take us up to 31.66, and that's not even saying a lot. But first things first, we got to make it to 31.36, and we'll see whether or not, if we can't find the additional selling, if we make that rally back up to 31.66. We shall see. Let's go into the peso. So there's nothing bullish about this. I know some people have tried to be buying this thing, but I mean, there's nothing bullish to consider on this market. Okay, we've already gone in, and I'm not going to go over it again for the umpteenth time. But as I told you, I was uber bearish once we lost 1944, and the reason I was such uber bearish is excuse me. And the reason I was so bearish is because, like I said, to me, it was a disappointment of the bulls. Because, like I said, even though I hadn't traded this, I haven't traded the peso in quite a while. But I put, like Blake likes to say, I try to put myself in the eyes of the bulls. And so even then, from a technical standpoint, man, I really gave this thing the real true benefit of the doubt. When we came down here, I go, wait, look, you know what? We got above this pivot. So we're still going to stay bullish. And if we get past the 61%, okay, fine. And it held the 61%, but then it just sat there for literally for days. Finally, we broke higher. And boy, I go, oh, and now we're on our way. And we ran out of gas around the 1985-ish area. We were looking for a move initially to 1982, I think it was. They made up to 85, then up to almost to 86, and then we rolled back. I go, okay, that's within reason. We're going to hold this 1960 area. We got below it. I'm like, okay. So we jumped back up. We didn't even quite make it, I don't think, to 65. And then we rolled back. I'm like, this isn't good. We need to hold at 50 or 48. When we broke even lower, excuse me, and when we came in that morning, I said, hey, look, it's got to hold 1944. If it can't hold it, that's it. So when we broke below 1944, that's it. Myself, put myself in the shoes of the bulls, although I didn't have a position to the upside or to the downside. From me, I was like, you know what, that's it. And I remember saying that, that's it. It's over, done with, no more bulls. Because I said, that's it. You've already taken out 1944. That's the last opportunity that had, even though it had not gone to new lows. That was it. There was nothing to hang your hat on. So I felt very strongly we were going to go to 1923.6. The difference was I thought we'd get a bounce. Well, we did get a minor bounce, but we didn't even close above 1930. And since then, it's been lower. And I said, if we get a close below, I thought our support was going to be 1916 on an additional overshoot. And I said, if we close below 1923.6, that opens the door for 1908. Wham, bam, thank you, man. We hit 1908 yesterday. But the thing was, as I said, giving it a chance and that was on Friday. It was the second day. I thought, okay, well, maybe we see an inverted head and shoulders. Maybe we can start to move. And we did move. I think that was on a Thursday. But we slid right back down and opened the door for even lower. And then lower we went, and lower. And yesterday we actually went sub 1908 for just a partial bit. And now we're working a little bit higher. But there's nothing bullish about this. I mean, we haven't even been able to close above 1916. You can see here's that inverted head and shoulders from Friday. And we haven't even been able to close above 1916. I mean, we closed right, looks like we closed just right below it. So, I mean, as I mentioned yesterday on the daily roundup, look, you got to walk before you can, you got to crawl before you can walk and walk before you can run. Look, immediate resistance is 1920, okay? I actually got to give up this 1916. Look, you're not going to see any rallies until we get a close just at least above 1916. And then the resistance comes at 1920. And then they're going to gladly sell this thing for any time this thing pokes its head up above 1923. And I have that for 1926. So we'll go over the analysis again. I just thought I'd touch on that and lay the technical case of why I was so bearish the peso. I hadn't even participated in any of it, so it's not like as if I'm talking my book or something like that, or or trying to give myself a big cheer. Oh, look what happened. It's not about that. I'm just saying, if you look at the technicals, that's why I'm making such a big deal. The technicals are what told you that this market was not going to rally. And then not only was it not going to rally, was that if it broke 1923.6, the door was open for a move to 1908. And 1908 is exactly what we went to. Anyway, it says on the peso, I don't know why I said the dollar CAD, but anyway, it says the peso tagged 1908. Although the pair moved off this low, it still could not close above minor resistance at 1916. Immediate resistance is 1920, and sellers will emerge at 1926. So there we go. So we're going to keep this at 1908. This market has not proven anything other than it just held at these lows. And resistance will be 1920. Resistance. Sellers will come in at 1926. I'm just giving it the benefit of the doubt that if it were to get above that, we'd get some additional push above 1923.6, but sellers will reemerge at 1926. Let's go move into the dollar yen. I put on here no changes. It's just marking time. Well, we actually saw the dollar yen pair back as the SPOOs broke below 3,000. They actually went down to 29.88, so it was a pretty good sell-off at the time. And we saw the dollar yen move lower. We saw that was based on the Texas Instruments looking for, what was it, a 12 to 17% fall in revenue. So that might might open the door for potential weakness here with the SPOOs, and certainly we've gone to pull back. So when we look on here with the euro, well, I put there was no change. Our support was 839. Well, we did. I think the euro dollar yen came down to 824. So we'll go back to 812. And on the upside, split the difference there. We're going to go with 865. 865 on the upside. And on the cash dollar index, and this analysis is available before actually in the early part of the Asian session or mid part of the Asian session. Obviously, sometimes we change a little bit, like let's see with the dollar yen. But anyway, looking at the cash dollar index, the dollar index rallied off of a near challenge of 97. You can see that near challenge. The market remains a sell unless it can close above 97.89 on a weekly basis. Now, I'll touch back on this. Remember, we saw this fall, and I thought we were going to make it to 97.89. That's from last week. That wasn't like hugely bearish to dollar, but I thought, okay, it's going to fall. It's technically, it looks really bad. Not real bad, but at the time, I didn't think it looked real bad. But I thought we'd get to 97.89, and I thought we'd see a bounce. Well, we did see a bounce, but the bounce was all of 20 ticks, literally 20 ticks. Or I think actually it's literally 21 ticks. So, but then we slid right back below it. So this market is an outright straight up sell unless we get a weekly close, not a daily close, but a weekly close above 97.89. That being said, resistance is going to be 97.65. It will remain that. We're not that far away. So 97.65. Doesn't mean we can't push above that. Potentially we can. We may, but it's going to be 97.65. Support, well, we held above the 97 even. We're going to go on and keep that. We're going to go and keep that the same way, in a sense that I think we can go above 65, but the rubber meets the road at 97.89. We'd have to get above 97.89 on a weekly close before it wouldn't turn it bullish. It would just neutralize the bearish picture, but it wouldn't turn it bullish. But have to get above 97.89. This market's a sell until we get to 97.89. Matter of fact, against 97.89, I would definitely be selling this thing against 97.89 and make it prove itself. And once again, if it closed above 97.89 for the week, okay, it doesn't make it bullish. All it does is neutralize the short-term bearish picture. That's all. We'll keep it at 97 even. That would break to new lows, but once again, it's still going to be support, so we'll put that there. Let's go and move into the cross rates. Okay, well, you can see with the Euro Kiwi, it really trapped a lot of fresh bulls. We broke above this. It looked like it was up and away, and then it just fizzled like hardcore. 3 straight successive down days, also below the apex. We're standing here. No changes here on the Euro Kiwi from yesterday. There we go. There we are, right there. I happen to have that there. I guess it didn't even go straight to the Kiwi yen. But anyway, no changes here on the, let's see, we had it for 73.09. Yeah, there's a 73.09. And on the upside, we haven't even been able to get above that. It's going to be right there, that low. We're going to call it 74.52. So let me update this, 74.52. And we're going to say it's a range. It's not even bullish. There we go. Let's go into the Kiwi yen. Well, we have a nice little shooting stone, a nice little gravestone doji for the short haul here on the Kiwi yen. So resistance is going to be right there at 69.72. 69.78 is a 50%. So let's just go, actually, there's that level. So we will go 69.74, 69.74. Support's going to come in right there. 69.09. Let's go into the euro yen. We have started to pair back in here. Maybe the euro can get one more hurrah, but that hurrah here would take us to 2098. Still bullish. And on the downside, right there, 2020. Same thing here. Can the euro get one more hurrah? Yeah, that's where the hurrah is going to be, 63.04 on the upside. We'll call it 03. That's fine. And the support, we had 62.07. Right there, off of that. So bear with me. Right there. So no changes there. 62.07 on the downside, and was it 63.03 on the upside. We already covered the Euro Kiwi, so let's move on to the Aussie yen. We've seen this pair move. We've seen this market pair back. Actually, could be worse, and actually hold. Can we move a little bit lower? Yeah, we're just going to move this just a bit lower here to factor in the risk, and right there, because we are starting to see the S&Ps kind of like a chink in the armor. I mean, it's starting to see with that Texas Instruments issue, and I'll go back to that one moment. I still have the news story there. So that's what really knocked it off. It says, adding to a more cautious mood this morning was a drop by shares of U.S. chipmaker Texas Instruments of almost 10% after the bell, when it said it expected 10 to 17% drop in revenue in the current quarter, and was worse than expected. And that really knocked the hell out of the S&Ps. So it's kind of put like a dent in the market for susceptibility. That's what I should say. So even though we're holding up, the market may start to say, will we see this going further out with other, other companies? Maybe it's just the first little bit of first sign. But the market, like I said, it's not going to immediately sell off. I mean, it did initially, but I'm saying is the market may look at things with a wary eye going forward. So anyway, that being said, we're going to be with 73, 72. And the upside be 74.58. Maybe have a tough time getting to that. Well, we'll split the difference. Call it 74.51. Let's go move into the guppy. Interesting here, especially now with the yen strengthening. That may have been it for the guppy. We're going to really tighten it up quite a bit. We're going to say resistance is 40.17. And support, we're going to open this tip for a further slide to 38.50. Really more on the backdrop of the strength of the yen, the potential for it to strengthen even further. Let's go into the sterling AUD. And I'm going to lower this down to that level. I think that we may see starting overall begin to weaken over the course of the next week or so. But for now, I think any rallies back on here would be faded. So we're going to go with 88.94. Right there. I think there's a risk for us to pull lower, and that risk is to 86.94. Once again, it may not take place. I mean, I know our outlook is very short-term oriented, but once again, this market is evolving. I think we're at a point about evolving. So a week later, we can see this market potentially down here to 85.50. So we're still a ways that could potentially slide back. Getting back to the other markets. As I mentioned about the boons, we've come off that support level. We moved up higher, I should say, off that. We did see the SPOOs get whacked pretty good off of that Texas Instruments news. We are seeing gold. Here we are now at that 1495. I mentioned to you about that earlier. Remember, I mentioned about this being a key level on the XAU spot, and how we run out of gas up in here. And we saw this one move, and I didn't even catch this. I missed this the other day, I told you. And the market was selling. I'm like, wow, I wish I could have had that. And I was just telling you this morning as we were coming in, we were $2.50 away, I think. And here we are up here. But I said, I'm not interested in it. I go, because this is the third time challenging 1495. Look at that. 1, 2, I have one. No, I don't care what it does at this point. Because that's the third time. Third time, I don't want it. I already told you. I gave you my own experience here. Was this is when the dollar CAD was falling, and last week. And I remember I was looking to buy it, and I had my my limit at 3107, and the low was 3112, and we bounced from 3112. I think we bounced like about 22 pips or whatever. I think it was like 22-ish around there. So the market comes back down again, and I'm there at 3107, and I don't get filled. The market bottoms right there. Actually, I think I saw the low was 3106, 3106.08 or something like that. Anyway, I didn't get filled at 3107. So the market rallies again. At this time, I think it rallies about, I don't know, 18 pips or something. I don't remember. The thing is, it comes back. Oh, heck no, dude. Wasn't interested in that dollar CAD at 3107 at that point. That was the third time. And like I said, what happened? It went right through it like a knife through butter on the middle of July. And eventually we went down to 3088. So that's what I'm saying. I never won something on the third try. So look how this market come off. And we rallied up. And we knew that this was huge level here. Look at this. 1495. You see that? A big, big level. Look at all these touches coming across there. Just absolutely huge. So that was a nice rebound, you see? And look, we had a nice little gravestone doji, and look at that sell-off. Then the market works back a second time. Hey, yeah, I'm there. I'm down. Okay? And the market paired back. And here's that one little gasp up here. This next time, no way. I don't want this. I don't want this for nothing. We may stall at 1495, but no. My thinking is that we even broke here from these other lows. That potentially this market could squeeze a little bit higher, maybe towards its 15. That's what I'm saying. I wouldn't want any part of it. But anyway, I just thought I'd just point that out. Is that it's basically the third time making this run back here. We did mention from here, but overall with the market paired back, like, oh my God, that's it. So 1, 2, and here would be the third time in more recent activity. Thinking, okay, there's no way we're going to break to new lows. And then we come back here, we slide back. Another time, we slide back. I'm not even looking at it. I'm not even interested in it at that point. So I decided to go and share that. That's what we have for today. Thanks for joining us here on the European Crossover webinar. We'll see you on the FX Daily Roundup.